Many crypto coins continue to crash, whereas DCG coins are selling aggressively. And many spectators believe the DCG group is buying coins by themselves. And we will also talk about Kevin being caught lying about cryptocurrency in this video. First, a quick disclaimer, I'm not a financial advisor. Alright, so let's get right into this video, and first we'll start by talking about the Digital Currency Group, which is one of the biggest venture capitals in crypto. They have an extensive portfolio of crypto companies such as Genesis, which is a lending company, but also CoinDesk, which is actually a news company. And Digital Currency Group says their revenue will fall this year. The crypto firm also discloses its loans to struggling unit Genesis, which we will talk a little bit about later. So what you could already see last week is that several crypto coins related to DCG, Digital Coin Group, have been selling off aggressively this evening. That was last week, December the 17th. So Filecoin, Zen, Ethereum Classic, Near, for example, leaving many speculators to wonder whether the selling is derived from DCG itself, whether they actually need to get that liquidity or whether they could be bankrupt. So something that already happened earlier is that crypto lender Genesis suspended their withdrawals after the FTX collapse. The demise of FTX created unprecedented turmoil for Genesis, causing the company's lending arm to be unable to meet all the withdrawal requests. So everybody that wanted to withdraw their money, it wasn't there because they were exposed to FTX. And according to the chief executive, DCG owes Genesis around $275 million that is due in May 2023, in addition to a 1.1 billion promissory note to Genesis due in June 2032. So DCG is actually trying to alleviate the fears of crypto traders and investors following the meltdown of the crypto exchange FTX this month, and exposures throughout the market that once seemed manageable have grown across the crypto industry, and investors are questioning the health of firms that were once viewed as safe, like the Digital Coin Group. So as I said in the beginning as well, all the links that you will need for this video will be down in the description, but I would definitely recommend you to check out what's going on with DCG. Apart from that, Binance also is in problems because Binance is backing out of its plans to acquire FTX, the company said last Wednesday, leaving Sam Bankman-Fried's crypto empire on the verge of collapse. So this actually came after that the Binance CEO announced that the world's largest cryptocurrency firm had reached a non-binding deal to buy FTX's non-US businesses for an undisclosed amount, rescuing the company from a liquidity crisis. And earlier this year, FTX was actually valued at $32 billion by private investors. And this was all following that it became known that there was a big liquidity crunch at FTX and Binance was trying to help them out. So right now it is unclear who will actually save FTX now that it's bankrupt. And Sam Bankman-Fried told investors that when the company was falling that it was facing a shortfall of up to $8 billion from withdrawal requests and that it needed emergency funding, according to people familiar with the matter. Now let's talk a little bit about the market right now. Bitcoin versus altcoins, which is actually the better investment in this bear market. So the market is obviously still dominated by Bitcoin, but there are many other competing digital assets called alternative coins or altcoins. And these can be thought of as variations of Bitcoin. So in other words, developers create altcoins to improve functionality or add features that are not present in Bitcoin. So just as Bitcoin was rallying last year, it's up more than 110% it was last year, many altcoins also had huge rises, like Ethereum that rose up more than 500%, and Shiba Inu, which rose up a shocking 380,000% in a year. And such numbers may entice investors looking to strike it rich, but altcoins carry several unique risks investors need to understand. And here's what you need to know when comparing digital assets in the crypto market. You need to understand what are altcoins, what are the differences between this specific altcoin you're researching and Bitcoin, and also just in general about investing in altcoins. And once more, if you want to read more about that, go check out the links down in our description. And lastly, we'll also talk about the former FTX spokesman, Kevin O'Leary, which we all know from Shark Tank, lying about crypto. So investor Kevin O'Leary appeared on CNBC's Squawk Box to face questioning over his thoughts on disgraced FTX founder Sam Bankman-Fried and his involvement with FTX as a spokesman and ambassador. So in this interview, he was actually pressed on a lot of different difficult topics, such as his FTX ambassadorship, but also still supporting Sam Bankman-Fried even after the bankruptcy and after it came to light what happened after FTX. He was also questioned about him still being a venture investor because his entanglements with FTX were more of a spokesman and ambassador position. And lastly, in the interview, they also went over Kevin O'Leary's past, where he was actually very against crypto and Bitcoin, and that turned around, and he was pressed on whether this was maybe because of the $15 million he actually received from FTX for his services. You can view the entire interview through the link down in the description, but he definitely did not get away clean. Alright, so with that we have reached the end of this video, and once more I do want to say that all the links for this video will be down in the description. But for now, if you found this video helpful, please make sure to add a like and add comments with questions I might have missed, and subscribe to our channel.